In this video, traders, look at 5 signs you're better suited to shorter term trading rather than swing trading. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, so when you're trying to decide which type of trading is better for you, we've got so many things out there, which market, which time frame, which strategy. But when it comes to working out, should I be a swing trader? Should I be holding my trades for kind of a few days, few weeks? Or should I be a day trader? Should I be intraday, kind of a couple of hours, or even shorter term? It's difficult to know because at the beginning of your trading career, you're not profitable. You're kind of spinning your wheels, you're kind of just making mistakes, you're losing some money, making a bit of money. You're kind of either, making a bit, losing a bit more. You don't really have the statistics, the raw stats to go, well, I'm definitely better at this than that. So what are some signs you can look at to at least make a more informed decision about, do I want to go down the swing trading route or do I want to go down the day trading route? So here's 5 signs that you're probably more suited for a shorter term holding period, like a day trader, possibly a scalper. Or I always say, if you're starting from scratch, unless you really have to go down the scalping route, towards more day trading if you're into the short-term stuff, because a longer hold period, minutes, hours, that kind of stuff allows you to take much more, and the commissions aren't as impactful, or the spreads. Right, okay, so the first one is you're good at spotting turning points on the lower time frames. Now, I'm a firm believer, guys, that you're either good at this or you're not. Now, it doesn't necessarily mean you're a good trader or not. It doesn't necessarily mean it's going to affect the way you trade, because there's certain traders out there who are absolutely useless at looking for intraday turning points, but it doesn't matter because their holding period is so long. They can be wrong for a couple of days, but they catch the bigger meat of the move and they make a substantial amount of money on the trade. But if you're one of these people who just can feel the market turning, you can see the market, and you kind of just have a good understanding of when supply demand is shifting, however you're making that decision, then maybe leverage on that and say, okay, well actually that intraday trader may well be better for me, because I seem to have some kind of ability of feeling when the market's stretched, of seeing when the market's kind of running up against a brick wall, spotting those pauses, spotting those turns. Now listen, are you going to spot every single one of them? Of course you're not. If you could do that, it will be absolutely fantastic and unbelievable as well. But if you're good at kind of spotting when there's certain little swings and rotations and feeling a bit more of the market, it's definitely a sort of an innate skill. If you've got that, then harness it and leverage on it. Now, there's nothing to say you can't leverage on that skill and kind of time your days trades intraday and spread them over multiple days. That's absolutely fine as well. We'll come to some other reasons why maybe you can consider that or not. But if you've got this ability and you feel like you're quite good at it, and you just got to be honest with yourself and say, listen, actually, my trades are very often I'm catching lows or highs, or then lows and highs, or I'm not. Now, it doesn't matter either way, but it might err you towards a shorter term holding period for your trades. Number 2, guys, is you don't like holding trades overnight or sort of while you sleep. I think this is personal preference. Some people have no problem with it at all. They can hold multiple positions overnight. They're not bothered about the risk. They recognize there's some risk overnight, but they're happy to do that. Some like to go in and not have that risk overnight. It's a personal thing. There's no right or wrong. Now, the argument is if you don't hold overnight, you can miss out on a big chunk of the move, and that's perfectly valid. The other argument is you can get caught out overnight because you can't control the risk, and that's perfectly valid. It's a personal preference. Again, guys, just pick which side you'll feel more comfortable with. Number 3, you can make decisions quickly and with certainty. So the point of this is that when you're swing trading, you have the time to sit there and think about the trade. You can watch the trade for a little bit. You can maybe come back to it, reassess it. You don't have to make an immediate decision. And if you're a little bit late with the decision, the impact isn't so bad. It depends obviously on the trade. But if you're holding periods, a couple of weeks, say, one day other side, unless it's a real kind of monster day, isn't going to make that much of an impact. However, if you're intraday trading, if you're trading over, let's say an hour holding period, 2-hour holding period, even 30 minutes, 15 minutes, that kind of thing, you need to make the decision quickly and with certainty and say, right, this is my decision, I am going long, I'm pulling the trigger now, this is my stop, and that's it. If you're dithering back and forward, or not necessarily dithering, that's kind of got a negative connotation, right? That's not fair. What I'm really saying is if you kind of need more data, you need more time to digest the decision, which is absolutely fine as well, there's nothing wrong with that. But if you're the sort of person who needs more knowledge, needs more evidence, needs more time to think about what you're doing, then intraday trading is probably not right. It's probably longer term trading, because for a person who doesn't need more, they're happy to take a few good pieces of information and make the decision rightly or wrongly, you know, then that might be the sort of thing for you as intraday trading. Now, at the end of the day, guys, as well, worth pointing out, more data doesn't necessarily mean a better decision, and neither of those examples means you're going to be right or wrong on the trade, or right on the trade, should I say. So there's no real benefit, but it's just like, what, again, personality. What do you prefer to do? Do you prefer to take your time, or you're happy to take a few bits of data, pull the trigger, and let's go? Right, number 4, guys, is you're not inclined to go on tilt with losers, stops, quiet markets. So going on tilt comes from poker terminology, where you literally have been stopped out, you've taken losers, the market's quiet, you get frustrated, and so you trade out of frustration, anger, revenge, all those things. And you know, if you're inclined to do that, you've got to be a little bit careful about trading intraday. If you're swing trading and you go into this mode where you're angry, you might make one trade out of anger or frustration, revenge, wanting to get your money back, all those things, and it's not going to be something damaging, because maybe the next morning when you wake up, you're like, you know what, I shouldn't really have taken that trade, let me cut it, and the damage is going to be very limited. However, you can get into a very dangerous cycle when you're day trading, as if you're trading from an emotional perspective and you keep doing it, you're stopped, you get into this vortex now of kind of keep digging the hole, wanting to get out of it, want to get the money back. Oh my God, I took that trade, double frustrated, trying to get the money back. And if you're that way inclined, then you've got to be careful. You've either got to have something in place to stop you doing that, because that's an account killer, simple as that, guys. Or you go, right, well, maybe I need to take longer to make my decisions if I'm vulnerable to that. And you might not know that yet until you've kind of been in a situation where something's really frustrated you, something's really got to you, and you've kind of wanted to pull the trigger, you've wanted to trade out of it, and you've kind of gone, okay, just take it easy. And the last one, guys, number 5, kind of the big benefit of trading intraday is that you prefer to start each day from zero. So in other words, you know, you listen, you go, okay, each day is a fresh day. I can go in and I just perform on the day. Now, the difference obviously with swing trading is you're carrying over some baggage. Now, that might be very positive for you, because you might be holding a very nice trade that continues, gaps up, and it's a very pleasant thing to wake up to. You wake up, you get your cup of coffee, you turn the screens on, it's gapped up, you were long, you had the rest of the prior day, and you've had the gap. You can decide how to manage it. But there's the flip side of that. You know, you could have a profit that disappears overnight. You could have a trade that gaps against you. You could have a trade that does nothing. You could be forced into a trade that you don't really want to have to manage, but you have to because you're in the position. So there's no real right or wrong with this. Yes, there's a lot of benefit to holding kind of those 3 or 4 day moves when the market really gets going, that trend really starts kicking, that momentum ignition really kind of fires that rocket, then it's great because there's plenty of meat there. But if you're kind of person who maybe, or also as well, guys, look at your lifestyle. If you've got stuff going on every other day or every other, you can't always be at the screen, so that's something to consider. But if you like starting the day fresh, right, what's it got for me, rubbing your hands, kind of doing your levels, preparing how you're going to trade, then maybe intraday trading is for you. If you prefer to have a theme over a few days, a few weeks, and be playing into that theme, then maybe a multi-day hold, multi-week hold is better. Again, all these things are down to your personality, how you feel. The point of this video is to say, listen, it's very easy to say you choose between swing trader and day trader, and it's difficult because you haven't got any real solid metrics. Not to say, well, I've made 20 grand as a day trader and I've made 2 grand as a swing trader. Okay, I've been doing it for a reasonable amount of time, I'll pick that. It's normally not the case when you're starting out. So forget about P&L and think more about the strategy, think more about the benefits of it, and think more about the pros and cons of it. And then you as a person, how that fits in, especially with these 5 things, and then you can make a little bit more of an informed decision. That's not to say you're not going to switch later on and go, you know what, intraday trading, not for me, I don't like this part of it, I'm going to do this, etc. But it gives you something to start off with, and maybe you can leverage on some of those positive strengths that really align themselves with the intraday trading or even swing trading. All right, guys, take care. Whatever you're doing, keep the risk management. I'll see you in the next one. Take care. Bye-bye.